This morning, venture capital firm Catalyst announcing it has now raised $8 billion in new capital, includes $4.5 billion for Catalyst's core VC funds focused on seed and growth equity. Joining us right now in an exclusive interview is Hemant Taneja. He is the CEO and managing partner at Catalyst. The firm has backed now some of the biggest names, Snap, Stripe, and so many others. Congratulations.
Thanks for having me.
What is this? I mean, one of the big questions about what's happening right now is you guys have raised a lot of money. A lot of venture firms are raising money. The question is, where's the opportunity today?
Yeah. And
where's the opportunity on the harvesting side on the other end? Because it appears right now there's a lot of companies that have remained private.
Yeah. So, and we think of ourselves as a global investment and transformation company. So if you think about what's happening in the world today, you have this whole idea that every country is starting to be more resilient in key industries after the pandemic and the wars and the energy crises. It's, in AI, in defense and energy, industrials, healthcare. So there's massive transformation of these industries happening. And then you've got the whole applied AI movement of how we're going to sort of leverage that technology in these markets. So from an opportunity perspective, these are actually really, really big ideas. So you need the capital base to build companies that can be part of the transformation there. On the other side, I think from a liquidity standpoint, there is a lot of work that the industry has to do. There's two reasons for that. One is you've got companies like Stripe and SpaceX that have decided they want to compound in the private markets.
Right.
And I think they have good reasons for it, at least for now. On the other side, you have a bunch of companies that'll get to like 100, 200 million in revenue. They're growing nicely, but they're not venture darlings. And I don't think they're fit for being public market candidates either. So what happens to those businesses? So I think that's where the industry has to mature and think about, in my opinion, new capital solutions to be able to get these companies to get to scale.
What do you think that looks like? And I ask because some people would argue this is actually a tough fundraising environment right now because there haven't been enough exits on the other end. So some of the U.S. pension funds and others are stretched because they're not getting the capital back to give back to others.
Yeah, look, this is a tough fundraise because we have to get liquidity around a lot of the companies that have been built over the last several years. But at the same time, the opportunity is massive. So the way we think about it is, at the core of who we are, working with the most ambitious founders as early as possible. So seed and creation are the core. And there, you probably saw, we combined with the firm La Familia in Europe and Venture Hive in India. So we can actually do this globally, given that's our mandate, and also help create companies that aren't naturally going to self-combust in the ecosystem. So that's the core.
Right.
And then the question is, how do you actually apply these to drive these industry transformations that are happening in the market today?
How much bigger are the checks going to be now? I mean, you talked about AI, and one of the things that's clearly now happening is a competitive advantage is literally capital.
Absolutely. So I think there are two things happening. One is seeding companies. We start with small checks like we already always have. But if these companies are on a path to be enduring businesses, they can take a lot of capital, and we want to be there for them for the long term. On the other side, I think applied AI is very interesting. Because one of the earliest opportunities in applied AI is everywhere in the last 30 years.
Explain to the audience what you mean by applied AI.
Yeah. So there's a lot of infrastructure being developed around foundation models. You hear about OpenAI, you hear about Anthropic, Mistral, which we're investors in, and others. Then the question is, what are you going to do with these models, and where do you build businesses that use AI, which, in our opinion, largely is a workforce transformation play. So the biggest opportunity today, and we're very focused on this, is everywhere there was offshoring with labor arbitrage over the last 30 years, you're going to onshore with AI productivity. So think about businesses like call centers, revenue cycle management,
right,
healthcare, legal services, accounting services.
You think that all that stuff that's offshore now gets pulled back here, for example?
I think it's going to get pulled back here with AI-first companies. And we're building a lot of those. And the results are fantastic. These AI models are already good enough to be able to capture that value and build highly, highly valuable companies that are high margin, and I think will be appreciated by the public markets.
What do you think of these large language models, the frontier models themselves? Do you think they will have a huge amount of value? Or do you think it's the applied piece of it?
I think these models they all start to get commoditized over time. And if you think about, one of those companies launches a model, the next one launches a tenth the cost sort of a few months later, and they start to have parity. That's good for the market, by the way. You want this stuff to be commoditized. The companies that are building these models, the ones I think that'll capture long-term value are the ones that build the tooling, because the adoption of these models in the enterprise is not as trivial as we think, because you need to modernize data infrastructure. You need to adapt these models to those specific industries. Then you need to have change management, because you have agentic AI and human workforces now working differently in these companies.